What is going on with CCIV and Lucid Motors? It's currently trading under $20. Is it time to dump this pig or load up and buy some more? Could CCIV be the next big short squeeze star? Can CCIV stock get back into gear? CCIV is down around 14% in the past week, while the S&P 500 is up 1.5% and the VIX continues to trend lower, down 6.3%. The 10-year bond is lower from its recent highs of 1.75. Dogecoin is up 400% this week. Some of you might be thinking, why are we talking about Dogecoin in this CCIV update? Subsequently enough, Dogecoin has something to do with CCIV selling off. Lucid Motors released a new cold weather test video this week. I also just noticed today a 100 million share dilution on the stock. Previously, the stock had 200 million outstanding shares on March 1st and now has 300 million shares today. We have a lot to unpack in this video. If you are invested or thinking of investing into CCIV, you don't want to miss this video. If you enjoyed this video, make sure to like, subscribe, and hit the bell to get notified for my latest videos. If you want to get 2 free stocks, try Webull. Get 2 free stocks when you deposit $100 or more. To get the most up-to-date high-growth stock news, my latest buy and sell alerts, and smart money market sentiment, check out my Patreon. It comes with private Discord and a full range of server benefits. All the links will be below under the description of this video. Could Lucid Motors be the next big short squeeze star? This article was released on April 15th. CCIV stock is down almost 70% from the 52-week highs. Today, that decline is continuing ahead of the Lucid Motors SPAC merger, and some investors may be wondering why. You also may be wondering if CCIV stock could benefit from a future short squeeze rally. To start, CCIV stock has been struggling since Churchill Capital IV and Lucid Motors finally confirmed their intent to merge. The hype following a Bloomberg article speculating on a such merger took shares to astronomical highs and drove a powerful retail investor following. Then, concerns over the SPAC valuation and specifically the PIPE investment hit CCIV. Although a number of catalysts have helped lift shares since the merger announcement, Churchill Capital remains far of its highs. The decline continues. It seems that the lack of clarity on the American jobs plan is hurting EV stocks as a whole, as investors are waiting for details about the long-term EV benefits. Also hurting matters is a new short report on QuantumScape. The report from Scorpion Capital says that QuantumScape is a pump and dump scheme and even says it's worse than the infamous Theranos. Those strong words appear to be shaking confidence in all EV stocks, and CCIV is no different. However, with CCIV down, investors on social media are turning to another story: short interest. Churchill Capital IV has some speculating that it could benefit from a short squeeze rally like GameStop. So what do you need to know about this story? CCIV stock and the short squeeze story. To start, where does the CCIV stock short squeeze speculation come from? Well, according to the data from Yahoo Finance, more than 20% of the float is being sold short. Other sources estimate that the short ratio is as high as 25%. More importantly, investors have caught on to the fact that Churchill Capital is one of the blank check companies with the highest short ratio. This means it is very appealing to some investors searching for short squeeze candidates. Additionally, as Investor Play's contributor William White highlighted yesterday, short squeeze have become very interesting to Wall Street. Since the GameStop squeeze, investors have been searching for more opportunities. We have seen speculation around ChargePoint. Broadly, short interest and SPACs is also climbing, supporting the case for a CCIV stock short squeeze. So will a CCIV stock short squeeze manifest? One Redditor thinks so, outlining that the case for a powerful blow to short sellers. Can CCIV stock get back into gear? Since the merger, the shares have soared to a high of $64, but unfortunately, the shares recently closed under $20. Its market cap is currently around $5 billion. The Lucid Air is expected to hit the market in the second half of this year, but it will not start producing a high number of EVs until 2022, when it expects to deliver about 20,000 vehicles. The company believes that it could deliver over 500,000 EVs per year by 2030. Following its merger with Churchill Capital, Lucid will have a strong financial base, as it is expected to obtain about $4.4 billion of cash from the transaction. Of this, $2.1 billion will be from the Churchill SPAC, and the remaining funds will come from large investors such as a Saudi Arabian sovereign wealth fund, Fidelity, and BlackRock. Moreover, there does appear to be considerable interest in Lucid vehicles. Lucid has received over 8,000 reservations for its EVs, representing more than $700 million of potential revenue. But despite this, it may be worthwhile to be cautious when it comes to CCIV stock, at least in the near term. Even though the equities markets have recovered, Wall Street is still skeptical of SPACs now. A large number of them have hit the markets, and it can be tough to predict the growth of EV makers like Lucid because they often experience delays and complications. Regardless, the overall long-term potential for investors can be a huge payoff. For short-term traders, the volatility can be brutal. Before we go forward with some price targets and numbers, let's take a look at their latest cold weather testing video.
You want to find any and every problem that could possibly occur on a vehicle before it gets into the hands of the customers. So that means testing in all kinds of different scenarios, everything from the coldest temperatures all the way up to the hottest temperatures.
In this wrap-up phase, we're using climate chambers like the one right behind me, and we are cold soaking the vehicles overnight down to minus 40 degrees centigrade.
When we soak the cars, every single molecule in the car gets down to that temperature. So you get to that baseline. And that has all kinds of different impacts on the vehicle. Lubricants change viscosity. They change their properties at different temperatures. The batteries react differently at different temperatures. Their ability to provide power, their ability to accept power when you're charging it.
We're going to test the heat up of the interior of the vehicle to see how quickly can we de-ice the windshields, defog the interior, and make the cabin cozy.
So you need to test all of these things to understand what the limitations of the different aspects of the vehicle are, and then optimize them.
What we're doing today is testing those limits. So we're going to make sure that the car's starting reliably, starting up every time. So when we swipe a card, we press a key fob, or we use the phone to get in the car, that's going to do it the same way it would when it's nice and sunny in California, or it's like dead of winter in Minnesota.
What I really liked was the quietness in the cabin despite cold temperatures. Typically, interior components get noisier as it gets cold, and that was a great experience to see how quiet the interior stayed.
Our customers don't expect 80%, they expect 99.999%. And the difference between 80% to that 99.999% level is really what defines a product, it defines a car company. That's why everybody is working so hard. One team, one goal. We're out to produce the perfect vehicle and satisfy our customers 100%.
Their extensive research and attention to detail continues to amaze me. I really like how they continue to be active by releasing new videos and content as often as they do. It keeps the momentum going, and it makes me happy as a long-term investor to know although they are neck high with production urgencies, they still take the time to produce informative content. Now for the good part, CCIV continues to sell off. The stock is down around 14% in the past week, which is freaking horrible. If we take a look at my technical chart, it finally broke my last support line here at 2050. This can create some further selling pressure. The next level of support I will be looking at now is at the $17 mark. The stock also continues to trade below my 10-day moving average, which is bearish for the overall stock. This is where the bad news ends. Not for the good news. The selling cycle here looks exhausted, and we can potentially see the stock bounce back up to about $25 within the next 2 weeks. Now let's step away for a few seconds to paint a bigger picture. The S&P 500 is up 1.5% in the past week, and the VIX is down around 6%. The 10-year bond is lower from its recent highs of 1.75. All this equals to an extreme bullish sentiment. The overall market levels look very strong. So if that's the case, why does it feel like we're in a bear market? Let's pull up everything we've talked about and put this together. What seems to be the case is that the money is flowing to mainstream Wall Street and cryptocurrencies. The stock market is at all-time highs. Bond yields are cooling off, the VIX is being hammered down, and Dogecoin and other cryptocurrency coins are rallying while CCIV is left behind. Unfortunately, SPACs are left behind for now. We had our days of glory recently, but for now the money has been rotating out of SPACs into other asset classes. Before I give my final thoughts, let's look at the institutional buying and short volume ratio. We now have more institutions buying into CCIV. We have 175 institutional owners making up 37% of the total shares. Now, something I just noticed when making this video, the institutional owners continue to grow, but the percentage continues to go lower. It seems like there's been a large number of new outstanding shares added into the stock. I couldn't find any news about this. If you guys find something on this, please comment below for me to go over it. Since the beginning of me covering this stock, I've noticed the outstanding shares have increased by 100 million shares, which is another reason why we're seeing this stock get crushed. Not only is it selling off, but it also got diluted. Originally, this number was at 200 million shares, and now it's at 300 million shares. This is terrible for us long-term investors. In the past weeks, we have a sea of green, which represents new institutions buying into CCIV. It might be possible they are creating new shares for the institutions while retail gets crushed. That's just my speculation. I'm not sure where the 100 million shares came from. The short volume ratio is at 21%. So what is my final take here? Is it a pig or not? As you can see, there's a lot of different variables here, and the answer is not as easy. Overall, I like this stock and I think the long-term opportunity has huge potential. I don't think it's a pig, but it's currently going through some rough waters. I can't say how long this sluggish price action will continue. If you're impatient and looking for some quick short-term returns, there's plenty of large cap stocks and crypto coins that are flying for some nice yield. I personally don't like chasing. If you are in CCIV for the long term, just continue to add as it gets less expensive. Also acknowledge that we might stay under $30 for a while. We need to see this money rotation from large caps and crypto come back into SPACs and EV stocks. Patience is key. Regardless, one thing that does bother me is these magical new 100 million shares. That's a 30% dilution. That's huge. I just noticed it, and looking back, this wasn't recent. I just happened to notice it now.